The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to take a look at this German bund. This is the 30-year over there in Germany. You can see we've completed a Gartley here. But the most important thing is, folks, I finally found someone that agrees with me that this thing with negative interest rates is total baloney. And it was none other than Martin Armstrong. One of our folks here at TFNN was kind enough to send Martin's letter on to me. I will post the link for it a little bit later this morning. You can take a look at it, see what he says. Armstrong is a very, very smart fellow. He's the one who spent a few years in prison because he wouldn't acquiesce to the government's wishes. But I met him in 1988 down at the Foundation for the Study of Cycles. That's when Tudor Jones had bought the organization. They had this incredibly beautiful building, and it was the big meeting of the year. Paul Volcker was the premier speaker, and I was asked to speak because my book, Astro-Cycles, The Trader's Viewpoint, had been a very popular book, and Commander David Williams from the American Federation of Astrologers had endorsed the book, and it won a couple of awards that I had put out for myself, $5 and $10 gift certificates. Now, the one thing that I would like to tell you about this meeting, Stan Harley happened to be there. Well, just about everybody was there that liked cycles. But I was giving my speech, and I was about halfway through, and I had circled the date of November. I believe it was November 9th, 1989, that I had circled it on the chart. I was working off of a one of those little things that you had I can't remember the name of the overhead projector, and I was marking on the overhead projector. I was very excited, and I had a black felt tip pen, and I circled on the screen November the 9th, and everybody started to laugh. And I just realized that I had used the black tip pen on the screen. It cost $250 to fix, but Tudor picked up the check, so it wasn't too bad. But the reason why I did that is I told them, I said, this is going to be a day that sometime when this happens in November of 1989, this will be on every single newspaper in the world. He said, I don't know what's going to happen. I said, but it's going to be huge. Now, we were talking about stock market stuff. Well, November 9th came and passed in 1989, yet that was the day that the Berlin Wall came down. And so it was a really big day, and but nothing happened in the market. The market just acted like it was nothing. So sometimes what you expect is not what you look at. Anyway, Mr. Armstrong really believes that this thing in negative interest rates is the what he called, I guess, the black swan. I don't think it's what he called it, but let me see if I can get this, since we're here early in the morning, let's see if I can, well, I can do it at the break time, so I'm not going to be pressured to take a look at it. Now, here is the the FTSE. You'll see here that we're having some nice rocking and rolling over there with the Boris Johnson things that go on with him, just like they do with our guy over there. They call him a mini Trump, which is kind of funny. But you can notice here on this FTSE, it has a really nice butterfly pattern, double bottom down there at that 72.85 level, had a little bit of a bounce. But remember, this is a 15-minute chart. But the reason why it's important is because you see these patterns on a 15-minute chart. Sometimes they're a half hour, sometimes they're 15 minutes, but that's neither here nor there. Now, what we had happening in the market yesterday is that we had a very interesting pattern in the E-mini S&P. Whether this is going to be hold on just a second here. You'll be able to see here, this is what we're looking at here in the E-mini S&P. There's a potential 135 pattern there. Whether that's going to be make any difference or not, we certainly don't know. There is one that we have to really discuss today that we've been following for quite some time, and it's just lined up perfectly. This is one of our Mr. Z trades that you got to listen to that boy, folks, because he knows what he's talking about. If you'll remember a long time ago, back when in the days of Cinderella and the was it Cinderella and the Seven Dwarfs? No, that was Snow White. Hold on, Cinderella was the prince. Okay, here's the chart I want to show you. This is a long-term weekly chart, and this is why we're going to be watching that, because we've been following natural gas very closely, folks. This is an incredible market to trade. If you'll remember, go back to 2016 when it was $1.60 there. That's when Mr. Z put on his first positions, and he look at that move, folks, from 160 to 4,000. That is a huge amount of money, folks. That's like 25 grand. Look what happened. It backed off to exactly 61% retracement in 2017, and it did the same thing in 2018, hit the exact 61% retracement. And then this year, we've been down to the 78% level, down at that 210 level several times. So that's why this has a potential to be something, really interesting on the long side for a long-term play. Now, whether that's going to happen or not, I don't know, but nobody else does either. So that's the key. But remember here, this is what we were looking at next week. Let's just get this in. This is from one of our folks over in the UK that is a big natural gas guy. Let's get this up here so we can take a quick look at it. And then I'll post the one that I did so we can see Mr. Z's trades that were in here. But you'll notice here that this was the number we were looking at, folks. We were looking for the market to come down and hit that 250 level. The low was 249.70. It went a couple of ticks below that and is now trading at 259. That's a $900 move. Now, it is a big head and shoulders. You're right, Mr. Bill. It certainly is that. But let's take a look here at where we were when this whole thing started, which was, quite a ways back. Let's get this up here so we can see it. I know I did it. Here it is. I didn't miss it. Here's one that we got from Mr. Z, way back in August, and you'll be able to see here. Okay, okay, let's move over here. You'll see here that what we've done now is we backed off. You can see that same support level right there at the 382 level. That came in at 249.70. We're now 258 and change. So it's started to move. If you're in that, you put your stop at break even, because it shouldn't get back there again if it's any good. That's really the whole thing of what we're watching. Folks, when you talk about these tariffs and stuff, that what's going on with China and stuff, I know the market reacts really violently to these things, but they probably have already figured out that that what's going to happen with these things. They must not be very bearish, and the reason why I say that is the fact that the stocks haven't reacted at all. Now maybe they will, maybe they won't, I don't know, but they haven't reacted very much at all. And there's also a very strong possibility that I could be wrong all about this thing, and this market might go straight up here another 3,000 or 4,000 points in the Dow Jones. That's always a possibility. So we're going to talk about that when we come back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I'm going to talk a little bit about this long-term chart that I've done here on the stock market. This is going back 20 years, just showing those 3 drive to a top patterns. Folks, these patterns sometimes fail. So a failure in this pattern, of course, if we break above 3050 in the S&P, that would certainly tell us that the symmetry is not there, but we'll be able to see that probably within the next, I would say next 5 to 10 trading days. We should have a pretty good idea if this thing is going to work at all. If it does start down, it's going to be quite big. But again, we could easily explode to the upside, and that would be very, very bullish, I would think. Let's just look at it a little bit closer here and do the monthly chart so we can see the last several years. And I've gone through this too many times before, but actually it's really worth it because it really explains the harmony that's in the market that is so important. You can see from the high on 0.1 to the high on 0.3 was 10 months, and the high from 0.3 to 0.5 was 10 months. But the most amazing thing is the swing between 2 and 3 and 4 and 5 are in perfect relationships of 1.618 and 618. In other words, 4 to 5 is 1.618 of the 2-3, and 2 to 3 is 0.618 of the 4-5. That's a really good description of what we're looking at when we're watching this. Now, all we need now for the market to tell us that this is in fact real is see a move in the market go below 29.46, I believe, is the key number, and so that's something that we need to pay attention to. Now, something interesting happened yesterday. I want to post this up here since we don't always, but whenever a market's making new highs, we like to watch what's going on with the open interest. And here is the open interest figures for yesterday in the E-mini contracts. I wanted to show you, you can see here the E-mini NASDAQ futures down 56,000, but look at the E-mini futures for the S&P. That's down 550, and that's because of opposite options expiration, folks. That's the main reason for that. But before that, if you went and looked at it a little bit closer, you'll see that even with that, there was a drop in open interest in December. In other words, there was no new buyers coming in. That had to be short covering. So that's an interesting statistic. If you remember what we were looking at when those Treasury bonds were up there and Treasury notes were up a lot higher, that's exactly what was happening, was seeing that drop in open interest. So, that may or may not mean anything. I really don't know. Now, one of the things that we talked about yesterday, of course, was the silver. I wanted to get this up here to see where we are here in silver. We do this for Mr. Z, but we were looking for the silver to get to the 1887 level. We only got, I believe we got to 1878 last night. We backed off just a small amount. Whether that means too much or not, we'll have to wait and see, but we'll keep a really close eye on it this morning because it's very, very important. The cattle and the hogs started to move in Ruby's favor. I guess she's buying enough to keep them up there, so that one certainly looks interesting. But the commodities seem to be holding. I think the interesting one today to watch on the commodity front would be the December soybean oil. Right now it's trading at 29.16, I believe, at around 29, which is down $90. That's cash money, $90. And so, Ruby's asking to take a look at the coffee and sugar. You betcha, Ruby. The problem will be is that they might, and I'm saying might, they're only going to be a little bit off, so it's not going to be. Sugar is still trying to make a bottom here, Ruby. Let's get this up here so you can see it. This is the one that you had a 3 drive to a bottom pattern, of course, and it looks like we're going. I'll be switching over to March sugar. That's the one you want to be looking, because we only got 2 weeks into October, so we want to watch March sugar. I think it looks pretty good. The coffee is still acting relatively well. It's held that support again, which I think you can see here that I believe it went right down to it. And then we'll see, where we're watching as we look at some of those. Basil just put in the December E-mini. Basil, do you have a chart you wanted to post, or why was that post put in there? I'm a little confused. Okay, the nearest contract. Well, just pick one. March sugar is a good one. You can't pick them all because you don't want to buy all 3 contracts because that triples your risk. So you got to pick one. Pick the one with the most open interest would be the one that I would think about. So let's watch it as we go through looking at some of these. So we'll pay close attention to it as we see these unfold. But the ones that I'm keeping a very close eye on this morning, of course, are these grains, because I think we got a really good potential bottom here in the soybean oil down here at this 29.10 level. It opens in about 7 minutes, so we'll see if that's going to hold up. Now, yesterday we mentioned a little bit about the euro because we were making a really nice, that's okay, Basil. I make those mistakes all the time, so not a problem. Someone help me. David, maybe you could help me, or maybe Basil. Who was it that said that the ETFs were the weapons of mass destruction? Was that Warren Buffett? Was Buffett the one that said that these ETFs were the Charlie Munger and Warren Buffett. Yeah, that's exactly right. So whether that means a whole lot, I don't know, but I will post that when we come up to the break in 2 minutes. I will post the link for the Martin Armstrong link and take a look at it. It's very short. You can read it in about 3 or 4 minutes, but he basically says that this negative interest rate is absolute total BS. And he said the people that started to do it are idiots. I think that's I recall how he said it. So let's watch that. So it's important. Let's do that right now so I don't forget. Let's just get up here and I believe I can do this without too much trouble. I'm hoping anyway. Give us a really good idea here. Oh, dear. Please tell me I don't. Oh, dear. Well, I'm going to have to get it the rough way. Let's just get this here. Copy. Link to new. Okay, let's try it this way. This is going to be it. I got it. All right, boys and girls, just give me a second. The old cowboy's going to get this in here so you guys can take a look at this. I highly recommend you take a look at it because Martin Armstrong is one smart cookie. And let's see if this works. Shut the front door and raise the rent. There you go. There it is right there. And it really describes, what's going on. We'll see what's happening with it. So pay close attention to it. By the way, just as a reminder, we're going to have Norman the Wizard Winsky on the 26th. So that'll be an interesting one to look at, and that's right before we've got a new moon coming up here on the 28th. So that'll be interesting. And of course, the big thing is that the coffee chart. I posted a coffee chart. I think I don't know if I did or not. Yes, that was the coffee chart that I posted. Yes, that was the coffee chart, and then I posted the link for. Hold on just a second here. I'm being asked a question. Let's see if I can get this right. All right, we got that straightened out, so we'll get moving on here. We're going to take a little break here in just a few minutes. If you have any questions, folks, it's 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to take a look at one other market that is always on everyone's mind, and we watched this last week. We've got to pay close attention to it, folks, because of the copper, is really an interesting thing here. Let's take a quick look at it. It's where we were on Friday. I believe we're going to have some pretty good support down at 252 in the copper, but any move below 240 in copper, that's a long way away, folks, 20 cents in copper. But if we get below that, that's going to be a sign that things are going to be rather shaky over there in that market. So let's watch that. If you trade copper, and frankly, I'm not doing anything. I spend all my time, of course, with the bonds, the gold, crude oil. The crude oil is interesting, folks, because of the fact that we have a really good support coming in here in crude oil. We'll be able to see it here very, very closely. Just 1 second here to get it up, and we'll take a quick look at it. You'll see here on the crude oil right around that $57 a barrel level. That's back into the gap area. It's also a 382 retracement of that previous low, which will be interesting to see. But the trend in the crude oil is still lower. You notice that we made that 61% up there in October when we had that 3 drive to a top pattern, and then we'll see. One of the questions that someone asked me is, why do I like the 3 drive to a top pattern so well? Because in technical terms, you're not supposed to try to pick a top or pick a bottom. Well, folks, with the 3 drive pattern, you have so many things going for you that you just about have to, because it's not about picking a top or a bottom. It's about picking a trade where you don't have to risk very much. Remember, you want to be winners think how much money they can lose, and losers think how much money they can win. On a 3 drive pattern, you're looking at so many numbers coming together that you know exactly where you are within a heartbeat. And that's what we're looking at when we're watching here in the stock market, because that 30.25 area to 30, and we could make 30.50. We really could. If we close above 30.50, then we could go to 33,000, 35,000, 40,000. Who knows where it could go? But when you have the 3 drive pattern, either a top or a bottom, you have several. You have double ABCD patterns. You have the symmetry between A and B and C and D. You have the 3 drive to a top pattern, which is 1, 2, 3, which is something that you like. So you have everything coming together at that particular time. And if it comes in at 1.618, that's like the stamp of approval for technical analysis, because beyond 1.618, you don't know where you're going to go. You could go to 2.168. You could go to 4.14. I mean, it could go anywhere. But beyond 2.618 or 1.618, you don't want to have anything to do with it. But that's why it is probably one of my most favorite patterns. When I have a bad streak, and I do have those, what I usually do is to wait for a really nice 3 drive pattern on a 30-minute chart, or if I'm lucky, it'll be a daily chart, and wait for that 1.618 number to come up, and that's what I like to try to do, and to see if it's going to work. Now, there's a really nice trade that's also involved with the 3 drive pattern, but it's a little bit differently. This is the one from Roy Longstreet and his son Bill. This is the 135 pattern. Now, this is different because you have higher bottoms. So this one, you're trading with the trend. Now, right now, you see we had a buy down there at 109.70. We're now trading above 110 in the euro. It's already made the first profit objective. So as you can see here, the distance between 1 and 3 and 3 or 5 were just spot equal, and these are 4-hour charts. So you're going over, you're going 3 weeks to see this. But it's got some really nice numbers there. You got the beautiful ABCD pattern there. You've got time and price, and that's what you're trying to do, is to say, okay, and you don't know whether you're going to be right or not. You got to remember, when you get into that swamp, folks, you got to kiss a lot of frogs before you find the princess. It is, Marshall, it is like a reversal 3 drive pattern, but it does force you to trade with the trend. That's the difference between that one, of course, and the 3 drive pattern is the 3 drive pattern. You're trading against the trend in a big way, but with the 135 pattern, you're certainly, you're trading in the direction of the trend, because you have higher bottoms. And if you're doing it on the downside, like we looked at with the S&P, put this up here, you'll be able to see it. This was the one. Let's get one second. I've got to check something here, folks, because I've got a couple of orders in here. So give the old cowboy a little break here and see where we are with some of these things. Okay. Did we get the filled in the oil? Oh, not quite. Not quite. ooh, I wanted to buy it at 10 and only got to 12 in the oil. So we'll see how that's going to work out. So we'll watch it, pretty closely. That's the main thing that we want to be doing. Okay. Well, someone had the question about the Christmas hogs. Give me a second here, and we'll get these up here. Just take a quick look at it. And just give me one second. It takes me a second here to pull these up, and then we'll be able to see the Christmas hogs here. But they have they have a really good chance here, folks, to have a pretty good run. Let me get this up here so we can see it. I didn't check the prices from yesterday, so if someone would alert me if we held that bottom and if we got up above 68 in the Christmas hogs, that would say that bottom is in, and we're most probably getting ready to go a little bit higher. But I haven't been able to pull that up yet, so I'm not able to see if that's going to be the case. What's with the sea of red? Well, what does that mean, Russ? Is there a lot of red out there? Is that what's going on? Who knows? Oh, dear. Okay, what else do I have to say? Anybody have any questions? 877-927-6648. It really helped, folks, if you had some questions, because I'm still suffering a tad of a jet lag over that 10 days in the UK, which was just so very exciting, and I just really, really enjoyed it so very much. And, that's what I could do is share some of the things that we talked about. Nope, I don't do any drinking. The bonds, yes, I think the bonds, we're coming. Just give me a second here, and I'll get the bonds up. I believe we're going to be getting up to that 61% retracement here in the bonds very, very soon. So let's just get it up here to see where we are, and then we will move on to the next one to get the bonds up here like this. Here we go. Put this up here. That's going to be at the one I'm watching here is we've got the 50% level coming in here at the 162.08. I believe we've hit that already, folks. So after this pattern that we had here, we came all the way down to 60.10. We dropped about $1.50 on the bonds, and then now we're up in this area. But I do not believe that the bonds are going to get above 163.14. That would be the maximum that I would expect the bonds to get to, because the bonds have a very, very, very negative long-term chart. And as we mentioned many times here, let's just pull up the notes here. Look at the notes, folks. This is the weekly or monthly, and you'll notice that we hit that 78% level, and it also was a 1.27 expansion, but it was also, folks, dropping open interest. That the boys were leaving the restaurant. There was no more food. So pay attention to that. And look at it really closely here. Humor me a little bit, but look at the high from 2011 to 2016 and 2016 to 2019. I mean, folks, those are 3-year cycle highs, and they're lower. I mean, even though they were talking about negative interest rates, something's not right in Denmark, boys and girls. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we've been asked to take a look at the Hang Seng Index. This is the market for Hong Kong. If you'll notice, the bottoms that we made back there in October was a big 3 drive to a bottom pattern. Then we had the Gartley coming in on December 26th. That was our big low. You notice it came in at a higher low, and then the market rallied up and made the 61% on the weekly, folks. That came in at 30,100. And I believe the high was 30,210. And from that level, we had a big move down to the 61% retracement, as you can see. And that was in May, right around Memorial Day. And then the market rallied up, stopping right at 0.3. And 0.1 was the high, 0.3 was the first retracement. And you'll notice that the retracement that we just completed here back on September the 12th, 13th, was exactly 61% retracement of the high from 0.3. So we have a 135 pattern. Now, as you can see here, we're down here just about 9 trading days now in the Hang Seng. We're trading below the level that we're showing here where we were Friday. I believe we're at 26,200 and change. So this market is still bearish, but the main thing is, as you can see, the incredible harmony that's here in the Hang Seng Index. It's just, it's really quite amazing. Any way for this thing to turn up, it has to get above 27,600. In other words, to be above that 0.5, and then of course it would have a bigger move, to the upside if we could do that. But that has not happened yet. But the thing to take away from this chart is the incredible harmony that you see on the way up and on the way down. And it's nice. I mean, these patterns don't work all the time, but nothing else does either. So if you're interested in those, that's a good way to see what's going on as you look at some, so that we'll see that. Anyway, let's no questions this morning here, so there's little else we can do here. Let's pull up another one that we want to watch. Oh, you know what we need to do is we need to check a couple of the FANG stocks that look real interesting. Let's get the first one up here, which is the Big Daddy Rabbit, which is the Apple computer. And I think it's an interesting one to look at here because, as you can see here, from the low that we made on December 26th to the high that we made into April, you'll notice that the number of days up in that move, it was an 81-day cycle, 81 days up. Then you see the bottom that we had down at Memorial Day, right at an exact 61% retracement. I mean, you can't make this stuff up, folks. Then you complete the ABCD pattern up there, as you can see. and guess what? 81 days up. So this is a situation that this 217 level in Apple should be pretty important, because if we get above that, then it's got a really good chance of acting pretty good. Now, here's another one that looks real interesting, folks, from a technical standpoint. And hold on one second. Okay. All right, let's take a look here. You'll see here on the Facebook, we had that island reversal pattern, if you'll remember, back here in July. Market closed right on the high, and then the next day it opened from where it closed at 214. It opened down at 175, and then it had this tremendous move down, and then it had the tremendous move back. We didn't quite fill the gap up there, but this market just completed a 50% retracement. If I don't know where, someone help me here, where is Facebook trading? If it gets above 196, then I would think it would process. Yes, it is a head and shoulders pattern. Maria, the reason why is the right shoulder's lower than the left. You have really good harmony in time, and you have perfect symmetry of 127. So we'll take a look at that, how it works out as we walk through some of these things here this morning. So that's what we're paying attention to, and we'll move on to the next one that we want to see here in the this is one of my favorites, because this stock, I think, is in trouble, folks. I'm not a technician. That's it. Now, hold on. Let's see. Where is the Facebook? Where's Facebook trading? Did it get above 197? What was the last on Facebook, folks? Let's take a look here at the Amazon, because look at the Amazon, folks. All we've been able to do on Amazon after that major bottom there, which was a 78% of the low on June 3rd, that was only a 382 retracement. That's a very, very small, 186 on Facebook. Oh, that stock's in big trouble. Wow. I thought it would be like 191 or something. So that's an interesting one to pay close attention to. Okay, if you have any questions, it's 877-927-6648. Al tells us that right now the lines are just totally jammed. He's unable to, if you're unable to get through, just keep trying. Let it ring for 30, 40 minutes. Oh, that'll be too late, because then we'll be out of it. Here's a stock that is doesn't have any friends, folks. It's one of the special FANG stocks. Facebook spiked to 193 today. Okay, we're looking at, you can see the negativity that we have going on here in Netflix. I guess there's going to be a lot of competition coming in for Netflix. So that stock does not look not very good. You got me confused here, folks. What is the last price? Someone's saying it's 193, and the other one saying it's 188 in Facebook. What's the story here? I don't know. You're confusing the old cowboy, and that's easy to do, but it's 193 today. Oh, you may. Oh, okay. Never mind. Let's move on. Okay. The spike was at 193 on Friday. Now at 186. Okay, got it. 10-4. We're in business. We'll be able to follow through with that without too much trouble. And then, of course, the last one we want to look at is one of my stocks that way I use every day, and that is the Google. And as you can see here, we completed a Gartley up there at that 78% level in Google. And whether that means too much or not, we'll have to do that as we walk through and see if it's going. But of the FANG stocks, of course, the one that looks the most bearish is the chart of the Netflix. That's the one that looks the most bearish. Now, whether that's going to be anything at all or not, we'll have to wait and see. But from that level, we want to be paying attention to how these things unfold. But it's still a little bit early in the morning, and we'll have to wait and see. Okay. The gold market, we had a high up there yesterday at 1535. That was a beautiful ABCD pattern that we had been talking about, of course, and we did get they don't always work that way, but if they did, let's get this out of the way here. Hold on a second, and I'll get this gold chart up here so we can take a quick look at it. You can see where we were and completed that beautiful ABCD. Here, just skip this up here. It could take me a second, and then we'll talk about this because heating oil. Marshall, I will do heating oil for you because you are a preferred Tucson visitor, so we'll get the heating oil up here to let, I'll update it for you too, Marshall, so bear with me here. Keep those cards and letters coming in, and we'll get this up here on the daily. Yeah, see, heating oil holding up pretty good, Marshall. It's right into that gap area. So watch it. Well, it did fill the gap. So this is I look for some type of a little bit of a pattern down here on the daily. Or excuse me, on a 30-minute, and then you might have something. Let's do that together. So we'll do that together and see if we see anything here. Not really. There's not much here. Let me show you what I'm looking at on the 30-minute, Marshall. I don't see anything. I'd like to see it at 194. That's back into that gap area, and then we'll do it. Anyway, take a few minutes for a commercial. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a comment about the bonds and the notes. The notes are actually looking a little weaker than the bonds, but the bonds have more volatility. But as we mentioned a little earlier, watch the 162.10, 162.16 level in the December Treasury bonds because that should be some interesting spot. Whether it's going to make a turn from this level or not, we don't know, but nobody else does either. So let's move on here. I've got to answer a question here that someone just Skyped me that I need to take care of. So if you have any questions, folks, it's 877-927-6648, and I will be happy to answer the question for you. Someone's asking a question about the Bradley model. Hold on one second. Here we go. Here's what we are. All right. The main thing that about the Bradley model, it can be done hundreds of years into the future. It just lines up the planets. Each of them have a different weight and a different variance as far as, the energy level that's there. But you want to be watching ones that are very, very, very accurate. That's the main thing. And, we have that, now because we should have topped here in the market there on September the 13th, which was the Friday the 13th. The cash index went a little bit higher on Monday, but none of the other indices did. And right now we're about 15 handles lower, but we could take that out on the slightest little tweet coming in from the tariff situation. But there's so much of it's going on, and we'll see if that, in fact, lines up the way we think it's going to. So those are just a few of the things that we're looking at, folks. So pay attention to them because sometimes they work, sometimes they don't. But the winners are going to be bigger than the losers most of the time, and they'll try to keep you on the right side of the train as you move down that track of life. Ooh, I made that up all by myself. Now, what we're going to do is we're going to wish everybody a wonderful day. Live every day in an attitude of gratitude, and may God bless. And we'll see you folks on the flip side tomorrow. And remember, on Thursday, don't miss the show because we have Mr. Norm Calls It to the Minute Winsky. May God bless.